Welcome to the extended platform of the Coach Up podcast. I'm Kanisha Hart. I'm your host. I'm super excited to have here today with me Tremaine Wills. You are on the YouTube September Kickoff Momentum Challenge of building the connection collaborator space, which is the foundation of the Coach Up podcast. And so I'm excited you guys are here because we're talking about something that you all as business owners and coaches absolutely must have as a part of your business. On here, we talk about a lot of stuff. So, Tremaine, we talk about a lot of stuff and a lot of different aspects when it comes to building a coaching business. But what you're going to talk about today, everybody has to have this. You can take different strategies, you can do different approaches when you're building a business. There's all sorts of ways to build a coaching program. You know this, you coach, but you can't get around what we're going to talk about today. So, Tremaine, I'm going to have you introduce yourself and tell people who you are and what you do, and so they can understand why they have to listen today.
Yeah. So, Kanisha, thank you so much for having me. I'm super excited to be on here to share and teach and talk about all things money. Again, my name is Tremaine Wills. I am a financial strategist. I own a company called Mind Over Money, where we are on a mission to help 1 million people become millionaires and become accredited investors. So, I am incredibly passionate about teaching and promoting financial literacy, helping entrepreneurs escape this phase of burnout and just not understanding how money works and really get on a clear path to get the coins working. Okay.
Mm,
So I'm excited for today's conversation and I can't wait to see how this really jumpstarts other people to growing their coaching businesses.
absolutely. And we're going to be heading into two very succinct, we're going to make them succinct because we want y'all to make sure y'all get all of this, but very important areas. And the first is going to be the thought process, Tremaine, around writing off all these things on your taxes so you don't have to pay taxes. But when we talked, there's a bit of a misconception that sometimes we as business owners have when we're thinking about that. So we're going to start there. And guys, the next thing that we're going to talk about, which I'll give you a little preview, is if you don't know a balance sheet, you don't know a profit and loss statement or anything about that, you want to make sure you either stick around to the end or you fast forward if you need to get there because you're going to want to see that. But Tremaine, talk to me about where's this loophole that you've seen in mindset where business owners want to write off all their taxes, but yet there's things that go along with that we're just not getting.
Yeah. So I think it is rooted in this fear of not having enough, right? And so when we are smaller business owners that aren't quite making six figures, we try to look for ways to keep as much money in our pocket as possible, right? And so one of the most expensive things you will ever have to do is pay taxes. And for many of us, we associate paying taxes with that is the man taking my money, right? And we don't really think about what paying taxes actually means. Paying taxes means you were profitable. Paying taxes means you made enough money to be able to have to pay taxes, right? You don't pay taxes on nothing. So when especially like smaller business owners who are just making enough to get by, you're looking for every place you can cut corners just to be able to make the ends meet. And I get it, right? But the reality is, we didn't go into business just to get by, right? We go into business to become profitable, to be able to buy our time back, to be able to do all the things. And all of that comes with a cost. And part of that cost is taxes.
Hmm.
So when we get out of this mindset of, I got to keep all of my money in my hands and I'm not going to pay any taxes. And we shift to a perspective of, okay, well, if the cost of success has a tax associated with it, I need to understand that's the price of winning, right? So making this adjustment from, I don't want to pay taxes, I don't want to pay taxes, to the price of winning is there's a tax associated with that. Now, there's all kind of strategy to reduce your taxes and to, structure all that great stuff, right? And the more you win, the more you learn about maximizing the tax laws. But if you never make that adjustment from, oh, I got to keep all this money to myself, I'm trying to write off everything possible, you don't put yourself in a position to figure out how you can still make a profit, pay what's required and nothing more, right? Um, and then enjoy the benefit of being a profitable business owner.
I can imagine that there are some challenges that come with operating from that mindset of I got to write off, I got to find all the tax loopholes that I can, I got to make stuff seem as small. Talk to us some about that. And I'll tell you one I'm thinking, and you'll probably, I'm sure you have many more, but one I'm thinking is that later down the line, in case we get audited, stuff
Mhm.
may or may not look like we want it to look like in that audit. That may be one of them. But talk to me about some of the some of the problems that this creates from a financial standpoint.
Yeah, yeah, that's good. So the biggest one is getting access to capital, right? And for many of us, we've learned how to bootstrap and hustle. And so we can figure out how to drum up $50,000 a year. But what happens when 50K ain't enough to bring somebody on and to put a down payment on a property or purchase some equipment, right? And you need to finance that, right? Well, if for the past 3 years, I've only shown an average profit of $10,000, what bank is going to say, oh, yes, I will give you $150,000? How you going to pay it back? Right. And so even though your business might be making six figures, if after you take all your deductions and write all the things off and it's saying you only made 10K, you can't afford, you can't afford that capital, right? So it really is being more strategic and having a clear understanding of what do I need my financials to say so that I can get access to the resources that I need. Right now, there are seasons where if you want to write all the things off, go for it. Right. And you might be in a season where you don't need to buy nothing. So cool. Drop your profit down as far as you want to go. Okay. But if you know that you have some major purchases that you want to make in the next few years, it's time to start showing some profit, right? And that's going to be connected to some additional taxes.
I love that you said earlier that paying taxes is part of winning. Like
Yeah.
it, and so to your point, if you want to be able to borrow, get at a line of credit, then you got to be able to show that you are winning because people
Yeah.
back winners. People don't, they don't voluntarily back losers.
Oh, no, 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 no. We don't want to be connected with folks that are not doing well,
Mm-mm,
right?
no.
And it's like separately from this, right? You start to identify as a small business owner who is struggling. And that's not what you want,
Yeah.
right?
Hmm.
If the mindset is, oh, I ain't trying to pay no taxes, you start moving in some different rooms where folks are like, my tax bill, the amount I owe in taxes is more than
Mm.
the profit that you're showing, right? So yeah, it's a perspective shift.
Hmm. Yes. I love that she just said my tax bill is more than your profit. Take note. You might want to have a cup of coffee with me. Um, okay, so then I want to get into before I do that, any other financial woes that this can create that people need to be aware of? I just
Yeah,
want
and you alluded to it, the audit piece, right? And audits themselves are not necessarily bad, right? If you have the paper trail to prove that all of these expenses were necessary and they were related to the business, um, that's great, right? But what we don't want to be is caught up in the gray, and we should have been clearly
mm,
side of moving right. So, but yeah, that audited thing is a big thing for folks, and we should be afraid of the alphabet boys. Anytime we are involved with regulation and rules that come with fines and penalties and possible jail time, right? All of that should make us want to move a little bit different. So, um, and now that the IRS is hiring even more people, they have more bodies to audit you. So I would just err on the side of let me operate as a true business owner and really put myself in position so that when people are engaging with me in business, I carry myself in a different way.
mm.
Right. And that demeanor naturally is going to push you to a place where you're not looking to cut corners. You're not trying to, skim off the top and do whatever you got to do just to get by. You're trying to become more proficient and a better business owner.
Love that. You when you were talking earlier, I thought about this story that rings true in my head, and it highlights to me why a mindset shift has to happen and how erroneously we are taught. I remember very briefly, I remember I was riding with my manager at the time. We were headed on a trip for work, and we all had company cars. So it was part of, I won't say all, but my position, his position, of several in the company. And he had a bigger car than me, obviously, because he was my boss. And so I remember saying to him, I want this car. And I remember, Tremaine, I remember clear as day. He said it was a Tahoe. I drove a Honda Civic. A little different, right? I didn't have to pay for it. I'm grateful, but a little different. And he said, do you want the tax bracket that comes with this? And Tremaine, I immediately said no. But as I thought about this later, right? Like it's a question, right? I thought, why would you say no to that? Yes, I want the tax bracket that comes with that because it means I'm making more money, right? And so I think it's evident that we are taught exactly what you're talking about. How do I waylay my tax bill as much as possible because I've heard I can, whereas it does not serve me well really going forward. If I'm making the money, it's a win that I get to pay taxes. There are strategies to pay less of them, yes, but it means that when I'm looking at the profit and not the penalty of having to pay taxes, and it's not a penalty. We appreciate all the government does for us, but it feels like a penalty. It is a powerful mindset shift to think, yes, that's the tax bracket I want to be in, versus how do I lower my tax bracket, which lowers my opportunities. So I just love that you share that.
Yeah, that's good. That's
All right, so I want to move us into, because as we talk about this, I want to put some tangible visuals so that you guys can see exactly how you can manage your finances intelligently, that Tremaine has offered so kindly to walk us through. Because there are a couple of forms that go along with knowing and managing the financials of your business that every business owner should know and be comfortable with. So, Tremaine, tell us about those. And then, guys, we're actually going to pull it up on the screen so y'all can see it and walk through.
Yeah, so there's two that I'm going to dive into deeper detail today. The first one is an income statement or profit and loss statement, right? So this one is going to document over a particular period of time how much money has your business made and what is the profit associated with that time period, right? Then the second document that I'm going to show you is a balance sheet. And what this does is it details at this point in time or any particular moment in time how much is your business worth, right? How much money do you have in the bank? What are your assets? What are your liabilities? How much equity do you have in your business, right? So we're going to walk through both of those so you can get an idea of what this should look like. And every single business owner should have one of these, no matter if you are doing it yourself or if you're working with a bookkeeper or an accountant. This is going to be critical to managing your money effectively. So let's get that up on the screen for you so we can walk through just some key details
Guys,
here.
if you're driving or what have you, come back and listen to this. If you're not and you can write down stuff, take notes. This is the time to do so.
Okay, so let me try to get it in present mode for you guys. Okay, so this is a very simple income statement or profit and loss statement. If you look here, we have our sample company, Paul's Guitar Shop Incorporated, is the income statement for the year ending December 31st, 2015. Now, everybody should do these, especially if you are handing off your tax preparation to somebody else. This is good information to be able to share with your person that's going to be preparing your taxes. So if we look here, we have our revenues. Revenue is the money that's come into our business. So when you make any money, everything that comes in is revenue. We like this number to be high. Okay. So when you're talking about, 6-figure business, 7-figure business, that's a revenue number. How much money came in? Here in our example, we have merchandise sales. So this is you selling a product and people paying for that thing. You'll see that this particular revenue stream brought in $24,800. Then we have another type of revenue. And here, this is a service type of revenue, music lesson income. And they made $3,000 for the year from this type of revenue stream. Now, one of the reasons why you'll want to break down the types of revenue and how money came in is to identify what is the most your highest revenue producing stream, right? Do you make more money from a particular product? Do you make more money from a service that you provide? And you can get even more detailed and granular with this, right? One of the things I teach is breaking down the different types of things that you offer so that you can see what is actually working,
Mhm.
right? So here you'll see they make most of their money from the sales of merchandise. So when you add the $24,800 to the $3,000, you see that their total revenue was $27,800. So for the full year, they brought in $27,800. Now, for a new business owner just getting started, not a bad gig,
Mhm.
right? You know that we probably want to grow from this point. Now, this top number is great and all, but how many of us know that it costs money to be in business?
Oh, it does.
So now you're going to have your expenses. This is going to identify, okay, well, how much did it cost me to make all that revenue come into my business? And so here you'll see cost of goods sold. So cost of goods sold is going to be how much was it to produce the product that you were selling, right? So in this case, for Paul's guitar shop, we can assume that this is probably the cost of him purchasing guitars, maybe I think they're called picks, the things
Yep.
that you play the guitar
Yes.
with,
Mhm.
and any other like supplemental things that you can sell with the guitar in his shop, right? What was his cost of those things? Then we have our depreciation expense. So this expense here could be associated with any asset that Paul owns for the guitar shop, the value of that asset declining over time, and you can write that off as an expense. Then we have our wage expense. So Paul didn't pay nobody a lot of money. He only spent $750 on wages, but he did pay somebody, so that's an expense. Then we have his rent expense. Again, Paul didn't spend a lot of money. He spent $500 on rent. I don't know where his shop is, but I would love to be in that location, okay? But that's his rent expense. Then we have his interest expense. So Paul might have a credit card or something like that where he's paying interest on money that he has borrowed. And so he spent $500 in interest expense. Then we have our supplies. So Paul might have bought a broom to clean up the shop. He might have bought some paper, all kinds of things, right? Those are his supplies. And then he has his utilities. Listen, $400 for some utilities for the year? Okay. I like this math.
She's like, this is where I want to be.
This is where I want to be, right? And so when you add all of that together, Paul's expenses for the year were around $14,850. So he brought in $27,800. He spent 14,850. So that means his profit is $12,950. Now, we like this top number, but that profit is less than half, right? So he spent a good chunk of his money running the business. Now, this profit number or this net income number at the bottom, this is the number we get taxed on, right? So when we talk about, oh, I got to write off some more expenses, what you're doing is you're adding more things to this list and you're increasing your total expense number, right? And so as you do that, that net income number decreases. And so you pay less taxes because the net income number goes down. So when you are trying to figure out, well, how much money did my business make? Your income statement or your profit and loss statement, that is the document that you're going to reference to figure that out. Okay. The good thing about this is Paul brought in more money than he spent. So he has a profitable company. We like this for Paul. Okay. But what we would like to see is that revenue number go up some more.
Absolutely.
Right.
Yeah.
So that is our income statement. Now we're going to go on to balance sheet.
While you are transitioning, one, that makes it look so easy, Tremaine. And I'm so glad you're breaking this down because so often we don't do stuff in general in life because we think it's too hard. I don't understand it. And I don't know if I want to take the time or have the time to learn. But that simple, straight to the point, easy. My question, and you may answer it with a balance sheet, is how often do we do the income statement or keep it up to date?
Oh, that is such a great question, Kanisha. So, if you are doing this yourself, this is probably something that I would be doing every single month, right? If you are not doing yourself, you might hire a bookkeeper or an accountant to update those records for you every month. And then, if possible, even if you have to do it on like one-off time or schedule some sort of consultation with an accountant so that they can explain what the numbers mean to you,
Mhm.
right? So that way you can get a better understanding of, okay, this my revenue numbers going up, but my profit's going down. What's happening, right, with my numbers? So every month is good. Of course, at the end of the year is when you'll see your profit and loss or your income statement for the full year. So you really want to pay attention to those numbers. But if you are using a system like QuickBooks or Zero or Wave, typically on those platforms, if you're doing it yourself, there's always some sort of chat feature or option for you to reach out for support on that platform if you don't know where to go. So leverage the tools and make sure that if you have questions, ask, right? There is no dumb question when we're talking about our money. I would rather you ask the question and feel a little bit like you should have known that than to assume something and be horrifically incorrect.
Absolutely. Yeah, that's a great answer. And there was one thing on there that depreciation was something on there. And I'm sure there are other expenses that people will say, I may or may not know how to calculate it. To your point, you just said, one, ask the question, but two, go ahead and put it on there so that you have an idea on a monthly basis what your numbers look like. And you can always find a CPA, reach out to Tremaine, find somebody to help explain the other numbers that you may be a little cautious about, but don't neglect the entire thing because you're unsure about one part.
That's right. That's right.
Perfect.
All right, so we're going into our balance sheet option. Now, I know, guys, this is the simplest balance sheet you've ever seen. And if you do this in one of the resources that I mentioned, Wave, QuickBooks, Zero, it's not going to look like this. It's going to have so many more line items, and I know, right? But I want you to get a basic understanding of what this thing is because it does not have to be complicated. All right. So a balance sheet is just a snapshot in time. So at this particular moment in time, how many assets do I have? How many liabilities do I have? How much equity is in my company? That's what the balance sheet is going to tell you. And as the name implies, it should balance. Assets should equal liabilities plus your owner's equity. So we're going to walk through some math here to work this out. So starting at the top, we have our assets. Assets are anything that you own in your business that has value. So of course we have our cash, right? So your cash could be in your checking, savings, any account related to your business. And in this case, $1,000 of cash in that account. Then you have your accounts receivable. So accounts receivable is money that is owed to you that you have already delivered on the service and you're waiting for payment. So here in this case, folks owe us $500. So we are waiting to receive that money that we have already delivered services for. So that is an asset, right? Now, there could be some additional assets that you have, like vehicles. You could have property. There's all kinds of assets that you can own, and all of those would be listed as assets on your balance sheet. When you add all of them together, you have your total assets. So in this case, when you add the assets together, $1,500, right? Now, for many small business owners, if you don't have a business, if you don't have a building yet, if you don't have any vehicles, if you don't own any equipment, your assets are going to look simple just like this. It'll just be pretty much any receivables that you have and any cash that's in your bank accounts, okay? Then we have our liabilities and our owner's equity. So liabilities is money that you owe. So if you have to pay anybody for anything and you owe them, that's a liability, right? So here we have our bank loan. Again, I'm not sure what bank this was that gave out $250. Maybe that's the balance that's left. Okay. But they only owe $250 on this bank loan. Now, it is still a liability, no matter how small it is money that is owed. So you would list that amount here. Now, what I want to remind you is that you are just listing the balance owed. So this is not where you'll be listing like the payment that you're making, the interest. The interest amount that has accumulated shows up on the income statement. Okay. The bank loan balance itself, that balance is what goes here. Then you have your accounts payable. So accounts payable is money that you got to pay somebody else for services they have provided to you. So here we have receivable, that's people owe you money. Now we have payable, that's you owe somebody else. Here we have accounts payable for $750. So when you add the total liabilities, we have $1,000 in liabilities. So earlier I said that assets should equal liabilities plus owner's equity. So in this case, we have more assets than we have liabilities in the amount of $500. That means you have equity in your business of $500, right? So as you start to think about the time and money, effort, energy you've put into your company, that equity amount should be increasing, right? We want to make sure that everything that we're putting into this business is resulting in a valuable ownership. The whole purpose of going into business is to build something that's worth something, right? But if we go into this business and our assets are sitting at $1,500, but we got bank loans, 25,000, we owe other people 10K, right? Now we got negative or larger liabilities, and the business is not businessing like it should, right? We have negative equity. And so what that lets us know is we're in a position where our business is not in a spot where we could sell it. It's not worth um really, it doesn't have positive value. So here, paying attention to your balance sheet is really going to indicate like, hey, if I were to decide I wanted to sell this thing, how much could I get for it? Right? The equity that you put in is going to be a good indicator of what your company might be worth. Now, some things to pay attention to, right? In your business, when you make deposits into your company, when you make capital investments and put money inside of your business to grow it, that's equity going in, right? But when you take money out of your business, right? And you're paying yourself, that is equity coming out. So you have to have a good relationship with keeping the business growing and the value of the business growing with how much money you're pulling out of it. Because if every single year you're pulling out everything that you've put in, you don't really have a business that is of much value because you've taken out everything that it is worth. So paying attention to that balance sheet and making sure that the gap between the assets that you have and the liabilities is ever increasing puts you in a position where now you might have an exit strategy for your business, where there might be a way to be able to sell this thing and get some money for it. So looking at your balance sheet and making note that the objective is to increase your equity, right? Just like you want to have ownership in other people's companies, you want the value of your company to be large, right? 100% ownership of a company with only $500 in equity isn't worth very much. But if I have 100% ownership in a company that has equity of $150,000, right? I'm starting to see the fruit of that labor being something that I can pass on to somebody else or sell
Or sell.
or
Yes.
sell, right? So that is the balance sheet in a nutshell. Again, this is something that is a snapshot in time. And so the value on the balance sheet is going to change daily, especially if you're a high transaction business where the balances in your bank accounts are changing all the time. The balance sheet numbers could be different day to day to day. So balance sheet is a snapshot in time. Your profit and loss statement, your income statement shows what has happened over a period of time.
So then the balance sheet you would update probably as you know that if you're accumulating additional debt or you're paying out some things that you're going to have a balance on, or if you're acquiring some things, that would be a couple of times to update it. Yes.
So, the same way that you are updating your income statement, when you do your bookkeeping activities, your balance sheet will naturally be updated as well because those same transactions and things that are happening will also impact how much cash is in your accounts. If you've made any payments to pay down your loans, if you made any payments to pay off vendors, all of that will impact what's on your balance sheet as well. Now, for your balance sheet, well, income statement as well, these are definitely going to be documents that you need if you ever go for financing. They want to know how much money you got, especially if your accounts are not with them at that bank, right? So, a good rule of thumb is to be mindful of where your business stands. Quarterly is probably a good time to check to see, okay, well, what's my financial health? If you are not running these numbers for yourself every single month, a quarterly check in to see, okay, where's my progress is good.
Excellent. There were a couple of things in there, Tremaine, that you said that I just wanted to make sure people had clarity on. And you explained the bank loan, so the difference between a balance of something that you have, right, versus the payment. Payment is going to be on the profit and loss, the income
Yes.
statement. The balance amount of what you owe is on the balance statement. Yes.
Yes.
Perfect. Okay. And then the other thing was when you were talking about equity. So I'm glad you explained it. And I love that you said you now are building something that is worth something. Because sometimes when we get into business, we get in for a number of reasons. We have a passion for it. We want to get out of the 9 to 5. We feel like we can help somebody, or we have this amazing idea that we want to share the world. We feel like we can make money. There's a number of reasons. But not too often do we think the long end game of, oh, I'm building a business that I can sell at some point. And to your point, it's got to be worth something. And so when you talked about equity, it put me in the mindset of a house. So the equity that we're building is not, you don't necessarily have to be able to quote unquote see it. The same way a house you buy for $200,000 and in 5 years you can sell it for $400,000. You've had transactions happening in that, you've had repairs, you've made payments to the utility and the property taxes every year. You've had those things coming
Taxes.
out, right? Okay. Them taxes do not go away. You've paid all of that, but at the same time, as you have stayed there, the market has appreciated, maybe you put in some work and that has increased the value. Now you have equity in that home so that when you sell it, it's more than what your expenses were because now your mortgage may be 150,000. Oh, and add all the expenses in. But that
Yes.
way people can see, okay, in a business, the equity is that growing appreciation that comes from my work is now generating. People see the value, they're paying more money,
Yes.
I have more money than expenses. That's the thing.
Yes. 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 That's so good. So, to kind of make this more tangible for us, right? Every company has to start somewhere, right? So, if you think back to Amazon starting, right? It was not a multi-billion-dollar business at the inception, right? It was in a garage, just shipping books. But over time, there were some assets that were developed that made the value of the company appreciate, right? So now we have this brand recognition that is valuable, right? That's an asset. Now you have all these um um intellectual property, right? You have different trademarks and copyrights and patents and all kinds of stuff that have cash value that will show up on the balance sheet. You have there's a myriad of things that allow the value of a company to grow, right? And if you think about even the customer list, right? If there's anything in your business that can be perceived as valuable to somebody else, that is an asset, right? And I think many of us as small business owners, we haven't thought about what are the ways that I am running my business so that even if I didn't want to sell the whole company, maybe I could sell this one particular asset that I have, right? Maybe you have a customer list of 2,000 dog lovers that live in Kansas City, right? And that could be something that's very valuable to a particular entity, right? It's an asset that's worth something. So inside of your business, it's more than just, I got to make X amount of dollars to be able to pay myself. But what am I doing inside of this business to position it so that there are pieces in here that make the value of the company go up in value over time?
That is so good. So good. You have provided such a perspective shift on a number of areas of our business, all financial related, which is every a part of every person's business. That has been super helpful. As always, there's never enough time for me to ask all the questions that I want. However, guys, you all have gotten a tremendous amount of information and value from this conversation. Go back and rewatch it if you need to, just to make sure you have the basic knowledge, and then attack the stuff. Right? Just because it's unfamiliar, we can't hide from that. And this is not an area where any of us can hide from its business area. Business owners. So, Tremaine, thank you for today. Please tell people how they can reach out to you and connect with you.
Yeah. So thank you so much for having me. I really enjoyed it, guys. I love, love, love teaching all things money. You can find me everywhere on social media. My handle is Tremaine Wills. And then if you just want to go to my website, it's www.mindovermoney.net and we can connect there.
Love it. Thank you again for today. Make sure you guys find Tremaine.